Good evening, traders.
Mm.
Welcome to today's
Yeah,
session. Hello?
yeah, correct. Go on.
Yes, welcome to today's session, being Tuesday, 25th August 2020. And as you have rightly seen now, we have switched gears in terms of how we are trading now. So it's no longer about how many pips you are making, but more on protecting our capital, and even better, making sure that we grow it. As for me, at least by 1% daily. So my main aim, my main target, and my plan is to make sure that even if I lose, I win, by quality. So of course there'll be bad days, but I try to minimize my losses to make sure that every day I get out of the market, you know, unscathed. I try to minimize my losses. So then to do that, uh, now that we're not just talking about number of pips, psychologically, when you start dealing with money, then fear can start creeping in. You feel nobody likes losing. Every time you lose, part of money, now that you have quantified it in terms of money, you feel the pain, and that's part of the things you're going to talk about today. How do you deal with that? So we are going to talk about understanding forex trading psychology. And then we'll also talk about mastering your trade bias. I'm sure by now, having practiced for a while, you're starting to develop a style. So you need now to move to the next level to master it. And then in conclusion, we will just say once you start mastering your trade, you have now an overall plan daily, and then you stick to that plan. You stick to that plan no matter what. So So to understand the forex trading psychology, now that we are not talking about number of pips, but money, you're now faced with the real financial decisions. The decision is you need to protect your capital so that you don't lose, and you need to grow it. And of course, that's a very tough decision. And it's very easy for you to get emotional. Nobody likes losing. Emotions start come into play, and without knowing, instead of making correct decisions, you start being sentimental. You could have one or two bad trades, and then without sticking to your plan, you can continue with the wrong decision and eventually even lose further. If you have heard of the concept of sunken cost, if you're losing, before you know it, you think you're going to dig yourself out of the hole, then you just keep losing. You basically just keep throwing money into a loss. So then it is good to start understanding that you need to avoid being driven by emotion in your trade and see how you can learn to work around them, work around your emotions, such that if you see that maybe the trade is not going against you, if you have set some rules, there are of course going to be bad days, then maybe it is time for you to get out of the market, relax a little bit. Maybe tomorrow will be a better day. So you need to have a strategy and a plan that for me, if I hit this level and it's not going against me, I do not have to win at all costs. Now that you're driving emotion out of it, now you're being a professional, you're developing a discipline. So the discipline is if I hit this target, I get out of the market. If the loss goes against me up to this level, I get out no matter what. Sometimes you hit your target and you feel that the market is nice. You want to get one more dollar, one more, just to make it a nice round figure. And that's when now things start going against you. And before you know it, even the little that you had made, that 1%, is quickly wiped out. I am sure you have felt that. Even me, sometimes, I usually like to do that, but I quickly realize that I have a plan. So that when the temptation is too much, that I need to make just one extra dollar, I remember my plan. And what is my plan? After I hit 1%, I start slowing down. And then if there was any open trades, I look for a strategic way of killing them. Sometimes I don't even wait for all of them to get to my target of 2 pips. I just close all of them once they're in a good position so that I preserve my capital. Of course, there's a lot of bias sometimes, there's a lot of noise in the market, news, and so on. So you start developing bias. Or you can see based on your analysis that this market will go up, this market will go here, or you've placed a bad trade, probably you've placed a sell, and then the market turns. Now it's going up against you. You are not looking at the telltale signs, the 3-bar reversal. You're not looking that this market has already turned. You're still placing a lot more trades, additional sales trades, hoping that the market will come down. You're developing a bias. You hope that the price will come down. Before you know it, it is too late. So it is time to start to understand that you need to speak the language of the market. If the market has turned and left you, then you need to quickly adapt and not follow your original bias and intrigue that you thought that the market was going to for a buy, and now it has turned for a sell. Once you begin to understand your emotions, and how to control them, then you will be trading professionally with a plan. So it really doesn't matter. If it is a bad day, you just say, oh, it's just a bad day for me today. Probably it's not for me. I need to get out, get in again early tomorrow, and trade again. So then what do we do? For now, I am sure you have started developing your style. If I speak for myself, I like scalping in a very low time frame, 1 minute, maximum 5 minutes. But the first thing, the things that help me make decisions, the things that drive me away from my emotions, is first I mark my trading zones. So based on every day when I wake up in the morning, I look at the charts, I look at the higher time frames, the 4-hour. I see what the market is trying to do. If it is good enough, the higher time frames will give me an indication, and then I quickly mark the areas where the market is playing. Basically, I look at the price cycle. I look at this is the last low, this is the last high, so that I know I am going to be playing around this area. So I mark them strategically. So before I start trading, I mark the areas that I'm going to be trading in. And before I make a decision to go in, I usually first sit back and watch. I watch. It's almost like I am testing the market before I eventually go. Is it respecting the zones? Most of the time I see that it goes up, it hits the boundary that I set, it comes back down, and then it starts retracing again. After I've confirmed that it is respecting my trading zones, now I start trading. What I am doing then is I am developing a discipline. Such that sometimes, even if the market temporarily turns against me, because I have seen that it's playing around this zone, I trade without fear. Now the fear, I almost drive the fear because I have developed a discipline around it. Of course, once in a while, if you do something often enough, ratio appears. So in the different trading style that we have been accustomed to now, the sniper trading and even the scalping that I'm talking about, you will notice that let's say for scalping, we normally do 5 currency pairs. You could be lucky sometimes if all of them actually take profit 5 out of 5. But more often than not, the ratio that we see after doing it so often is you get at least 3 out of 5. So meaning 2 out of 5 times you might lose. But then, now what do you do when you're in a losing position? Now you need to start learning how to manage your trade. You don't get emotional and pray that this thing is going to turn and still stick to it, and you get further into loss. Basically, the sunken cost phenomenon. So once you have noticed that this market is leaving you, you need to make decisions quickly. Either kill the trade or change your style and now go the way the market is going. And you have to remember that you have to keep practicing on your style. Some of you probably like the sniper better than scalping. So you need to keep practicing. Practice, practice, practice. And then for now, there could be a lot of noise. You hear, oh, Trump is going to speak tomorrow. Oh, and that could influence part of your bias in terms of you're placing buys instead of sells. For now, probably you need to discipline yourself like you trade what you see. If the market is showing an uptrend, trade probably in one direction, put buys. If the market is showing a downtrend, then put sells. Trade what you see. And you start developing a discipline. And probably it will be better to stick to one currency. You start learning the behavior of that currency. If you look at my statement, you'll notice most of the time that I trade Euro USD because I don't want to, be gazing at my chart. Oh, now Australian USD is going down. Oh, now Euro Japanese yen is going up. But at least if I stick to one currency, I'm able to manage my trades better. Now, I know that is a bit of something that is easy to say, but ease does not mean it is. No, it's simple to say, but simple does not mean that it is easy. So, in conclusion, what I'm trying to say is you need to now start developing your trading plan. And part of your trading plan includes favorite time that now you have identified that is good for your trading. Secondly, is the currency pair that you like the most. And most importantly, if you're a scalper, you need to trade when there's a lot of movement in the market, when there's a lot of volatility. And then we have a very defined plan, starting this week to grow our capital to minimize your losses. So that becomes part of your plan. And you can make it as simple as, for me, I want to grow my capital by 1% daily. So even if the market is looking really nice, once you hit your 1%, please get out. Don't think you're going to make that extra dollar. That is where now the market might punish you. This market is very unforgiving, especially when you start showing the greed streak side that you want to make that extra, just that extra. Sometimes if you overtrade, when you stay in the market longer, things might just turn against you. So you need to learn to get out as soon as you hit your target. Secondly, there will be bad days. As you have seen, Forex is all about opportunities mixed with difficulties. So there are a few bad days, and any strategy could have some losing streak. So you also need to develop a plan that if it is not your day, if the market is not behaving the way you had expected, you have set up your zones, you think it's going this way, then suddenly it turns, because it happens. Then you need to decide. You need to make a decision. Get out, re-strategize, and come back better. Rather than sticking, and then you continue losing, digging the hole that will be very difficult to recover from. Finally, I want to end quoting this famous author, Roy Bennett, who said that it does not matter how many times you get knocked down, because you will get knocked down. All that matters is you get up one more time, then you are knocked down. I know some of you probably follow football. There's a famous team from Spain called Real Madrid, and there's a famous coach who was gone. It said, "It doesn't matter how many goals you score against me, but as long as I would score you." So that should be one of the mentalities you have, that you're going to lose some of your trades, but you will get up one more time every time you get knocked down. Thank you very much. I want to pass it over back to Coach so that he can open an open plenary session for an open discussion.
Okay. Thank you. Thank you very much. That was very short, brief, and precise. I look back and I'm actually excited. I'm excited at what I'm seeing happening in the group, and I'm expecting to see even more. So, for those of you who are still struggling with the idea of making 100 pips or 200 pips and so on and so on, you'll get there. You'll get there, and better yet, you will be able to grow an account. Why am I saying it so confidently? I'm saying it confidently because I know most of you, when you guys joined this place, you didn't know anything about trading. Absolutely none. But right now I can say with confidence, in that short time, some of you are the best performers. Of course, to me, it doesn't really matter. It doesn't matter, who's performing what. We are not competing against each other. We're trying to build each other. And the way to build each other is for us to help even the slowest person. Okay? So when things like this happen, when now we sit together and now start reviewing what is happening, like in this case, our brothers and our sisters who are doing great things, it's very encouraging. I want you guys to hear directly from them. So it doesn't appear that I have coached them or what we're saying is not real. No, these are real people. You've known them, you've known their growth, you've known when they were struggling, and here they are telling you what they're doing. I can tell you for free, if they keep this up in the next 6 months, I can tell you for free, they will probably be millionaires by then. If you know what I am teaching you, because once you perfect your art, there are people out here who have money, they just don't know what to do with it. They're looking for where they can invest money, where can they put the money, but they just can't give it to anybody. No, especially in forex. They want to give it to somebody who can grow for them their account. And guess what? That's exactly what we are doing. Because you guys have learned, you know what forex is, you know what it's not. Now for sure you know it's a scam. It is a market where people go buy and sell currencies. But more importantly, that actually you can make incredible amounts of money. So our journey started a bit slow, a bit sloppy, okay, which is okay because we all come from different backgrounds. But slowly, I helped streamline our learning from the excitement about tips, what the buys. Can you guys mute? Can you mute the microphones except for me? Anyway, we are at a point where we call it a great moment, where now we are converting what we have been learning into practice. And the practice is learning how to protect your investors' money. The goal, primary goal, is to protect. But as you trade daily, you try to grow it. For now, I'm trying to teach you a discipline. And the discipline is only 1%. I know you can do it. I know even 5%. I mean, I've surprised myself before. I've done that. At what cost? The risks are very, very, very high. And trust me, the longer you stick in the market, the easier you start making mistakes. When you're trading, it's very intense because you're working with the chart, you're working with the movement, you're working with your, the trade you want to take. So it's actually very intense. So the longer you stay in the chart, the longer, in market, the easier now the mistakes start coming in. And that's how you hear people saying, oops, I blew my account. Okay? Or today my trades went against me. Because maybe we stayed a little longer than we were supposed to be there. Ideally, if we do our homework very well, like Ken was saying, when you start off and do your homework very well, look at the charts. See which ones are going up, which ones are going down. Okay? Draw your resistance line. Okay? To a point where before you take your first trade, you kind of know for sure where the market is coming from and where it's going. If you don't know that, don't even take the first trade. Better you stop, don't take anything, and go back and see what the market is doing. Because before, it was okay. Before, you look at the charts, they're going up, you buy. The charts going down, sell. But now I'm saying, no, pause. Pause, look at the chart, but now with the reference where it's coming from, to what is going on in the market. Try and understand it. And then ask yourself, so where is it going? And if you can answer yourself, I think it's going to go up or it's going to go down, then you are on your way to success. Because now that you know it's going to go down, what should I do? If I'm doing scalping, well, the other one is easy. The sniper, that one is easy. I'll give you signals and you do very well. But the sniper one, that now is your cash cow. Because once you know that the market is going down or it's going up, then you quickly jump to a smaller time scale. And that's where you make money. So as we go on, I'll be trying to talk less and less, but let you guys learn ears. Okay? So we still have other brothers we haven't talked to in the group, but because Ken and Vincent have kind of shown the way, leading by example, if you look at their report and their trading, it is good. That's what I call a selling record, because when the funders want to look at whether they should fund your trading, they look at your statements. Not they will not sit and wait for you to send them SMS. No. They'll just say, okay, email me your statement, performance, the last 3 months or the last 6 months. And they will actually analyze. And when they're analyzing, the biggest things they look for are, do you have any major drawdowns? Drawdown means, do you have heavy losses? Like, are there series or a number of trades where you lost so many and they were deep? That's the first thing they look at when they look at your statement. first, before they look at your statement, okay, the assumption is you are a profitable trader. Number one, you are profitable. Pick. If you're not profitable, they won't even look at you. So first, you're profitable, which means that if you're given $1,000, you can actually do 2,000. At least you're profitable. That's number one. Number two, they look at your detailed statement. Now, what they want to see is consistency. So if you're trading 2 pips, and then suddenly you jump to 5 pips, then you see the market changing, then you go to 8 pips, they'll be like, I'm not sure what they're doing. And it might be just be luck, because they're not consistent, like you don't have a plan. However, if you're consistent, you set your mind for me in this market, and there's nothing wrong in one statement being particular pip size or not, no. But the fact that you can decide it today because the market seems to be good, I might increase it to 3. Okay, fine, that is okay. But to me, it's better you stick to one. If it's 2 pips, then stick to it. If it's 3, then stick to it. Because when these guys look at your statements and they see consistency, they can look and see from the beginning to the end, you're targeting only 3, 3, 3, 3, 3, 3, 3, 3. And even then, you don't get 3 pips. Sometimes you get 2.8, 2.5, or 3.1. But on average, now that will add you a lot of points, brownie points from them. Then I mentioned the second thing is the drawdowns. Don't allow yourself to take careless trades when you haven't thought, and then you lose a lot. Where, if your average loss maybe is -3, -4, -5, -10, then avoid -20 pips, -30, because that will look bad in your statements. Because they'll say, hey, this person is a bit risky. Even when they see they're losing, they don't get out of the market. They still stick through, thinking the market will turn around. So that's risky. Now, then there are those who will look at your statement and they'll say, okay, fine, he has lost here because part of trading is actually losing. They might say, how do they recover when they make losses? How do they recover? And that, again, is a skill you will learn. When the market is going against you, you have to have a way of recovering. Okay? So these are skills that we'll all learn with time. You just have to trust the process. Trust that I have an idea of what I'm doing, and that I want to help make you into a successful trader. That's our goal. That's my goal. That's our goal. At some point, we will all be able to talk about this confidently. But now, for the remaining few minutes, I'm going to ask a few questions, maybe interview the guys who've been doing well so far, and then give you a chance to now ask them questions. Right? So I'm going to start with Vincent. If you're there, in 2 minutes, can you tell us how you did? And even as you give these answers, please remember that most of these people are where you were not too long ago. So even as you give an answer, try and give that insight that you think really helped you. Okay, Vincent, 2 minutes.
Thanks very much, Coach, and fellow team members. I think for me, scalping has helped me quite a bit because I'm able to see and be able to get in and out of the trade with a certain level of certainty. Because I can see, as Ken was saying, after marking the trading zones, and then just marking the trending lines. If you back, call it back testing, and you see how the market is moving. For instance, what I've been doing is, for my 1 minute scalping, I've actually been using 5 pips. But I first measure and see between on a price cycle what has been the trend, say for the last 8 hours or the last 4 hours. So I measure that and I see if I get in at 5, I can come out in between the trend lines and or in between the trading zones. And I think that has helped me quite a bit. So I'm able to get in and out with a certain level of certainty. Now, for the sniper strategy, particularly in the morning, I've sort of tried to combine both the sniper orders and also just looking at the direction of the market to see whether a buy or the sell is more likely to materialize. Because last week, or let me say the last 2 weeks, before we opened this challenge account, I think I bombed out literally every day, and I went from 1,000. I think I ended up at about $600. Then I started to recover. It came back to about 750. So for example, the 15-minute trades, if I put the sniper, because what was happening is it would trigger on the buy, doesn't take the profit, goes again and triggers on the sell, doesn't take the profit. So I found myself hanging in between, and I'm not sure what to do. So the strategy I adopted is do the snipers, but then look more closely which one is likely to which one is more likely to materialize. But also in terms of the pips, when I set up that rectangle box, I measured the rectangle. And what I found when I did back testing, even way back up to June, May, I found that the trades tend to happen at about 35 to 40% of the measured rectangle, the measured height of the rectangle. And then I check to see that 35 to 40% is also within the whether it's support line or the resistance. And I've tried that, and each time I think I've got it right. So I think it's just for me, I've merely just used I would say technical analysis, just looking at the trends, marking the zones, measuring the trades that have taken place, and then it tells me when I can actually get in. And I've tried that, and it has worked for me. That's what I would say. Thank you.
All right, thank you very much. So for the remaining time, I promise that I'll give you the chance to ask this directly because you're also on the same journey. So this is your chance to learn from the color touch on mouth. Okay, you had it from me from the beginning. Now you get to hear a different twist of people who joined and walked your journey. All right, so we open this for Q&A, and just for the record, it's not just Vincent and Ken. There are many others who are also doing well in the group. So as we continue, we'll also be giving others a chance. We'll interview them, and we'll give them a chance to tell us how they're doing. So, questions? I didn't realize I have perfect students, perfect straight A students. All right, in the absence of questions, I'm going to give others a chance to tell us how they were doing and how, performing. So, Jackson, you want to share with us? Just 2 minutes, unless if there's a question, then we'll cut down your. So definitely there.
Hello?
Yeah, are you there?
Hello?
Yeah, we can hear you.
Yes, this is Mohammed.
Okay, Mohammed.
Yeah, so I'm one of the new students.
Yeah.
So I have a demo account, and I think today was the first time I tried to do some trading.
Mm-hmm.
So I was trying to use scalping,
Mm-hmm.
but it hasn't worked for me. I think I lost more than I gained. So I tried to look at the, just the short time frames, 1 minute, 5 minutes, and try to see where it is going, and then try to place orders. But what was actually killing me was the stop loss. So you will find that I've put my take at like 2 pips. So I get a number of 2 pips, which is maybe like $0.2, $1.8. Then the one that goes against me, 1 or 2, because I've put a stop at like 35, 3.5. So it's like it can wipe out like 5 positives, or 5 positives is wiped out by 1 stop loss. So that's how I'm still trying to figure out how to manage that better.
Okay.
Yes.
So the bad news is that is correct, and that is the market. So we all go. But the good news is everybody here, even those who are making what they're making today, they all went through that, including myself. So don't beat yourself too much. Don't be very hard on yourself, because it's a journey. If you think of it as if you're diligent, thing is, don't give up. Don't give up. You sign up, let some more, you can sign with me. Try those signals I send every morning. Practice, practice, practice. Trust me, I think 1 month from now, we'll ask you how you're doing again. I'm sure you'll have a different story.
I hope so. I'm looking forward to that.
Okay. You hang in there. If these guys have done it, you will do it.
Yes.
Okay. All right. Any other questions? Comment? Observation? Okay. I don't see any. So, big picture, we will still continue to try and our trading. And for many of you, as you continue chatting me, asking the questions, or even asking the questions in the group, don't feel bad. You will get better. You will get better. Okay, don't give up.
Yes, before good evening, traders.
Yes, good evening.
Yeah, I was trying, but my microphone was not trying, was failing to connect. I wanted to ask the question, but it has just connected right now. This is Amanya.
Okay, Amanya.
Right,
Make
sir.
it short.
Yes, okay. I tried to trade today and yesterday. At least I'm meeting the target for the day, but I'm failing to use the C spot trader, the CT spot where something to to generate that into Excel, because I didn't have Excel. Today I've tried and have it, but it is not giving that option whereby you go to Excel and you generate that report. So
Okay, I think I tried replying to your question. C-Trader is such that you almost don't need Excel, okay? Because if you click on statement, it produces what we call a CVS report. Okay? It is, if you need an Excel, then that's when you click on save, then it will save it as an Excel sheet. But the CVS report, which is basically a statement, is good enough. It's good enough for our purpose here. It's good enough when the, call them prop fund, investors, yeah, that will be good enough. So, but I want us to start practicing to actually produce those statements, and it's not impossible. In fact, I've been insisting that even those who have phones, a quick run to a nearest cyber, you log in, because C-Trader allows you to have a web version. So web version it means that you don't have to download things on even on your phone or on your computer. You just go in and just type csport.com or csportware.com or something like that. And you log in using your Gmail, assuming you have Gmail or whatever email you have. It will bring your account. And then when you get done with your trading, down at the bottom right-hand corner, you look at history, then you can click on statement. It'll auto-generate the statement. But good question. Side chat me or side chat Ken, side chat Vincent, side chat Jackson. A very main product in the group now who can also help you. Okay. All right. Any other questions? So our time is almost up for this session. We try to make it just a short 1 hour, but you get the most value when you come prepared with questions, especially your challenges when it comes to your trading. When you come prepared with those questions, then you end up benefiting a lot from the learning that we're doing here. And like I told you, I have not hidden anything from you. Everybody who is here came in as a learner. And what they're doing now is amazing. Okay, if they can do it, you can do it. I know you will do it if we don't give up. So just don't give up, be patient, and we'll make it. Okay, all right, ladies and gentlemen, thank you for coming. We will see you on the trading platform. Happy peeping, and then we'll have our follow-up class on Thursday. Please come with your questions to be answered. Good night. Bye.
Thank you, Coach.
All right, karibu.
Okay, bye.
Bye.
All right. Bye.